Good morning. This is Ron Brown. It is 6:44 a.m. on Saturday morning, and this is the 22nd of February. In this video, I'm going to show you, I'll take a quick look at the markets with HGSI, and I'm going to explain the files that I have added to my Insider Club files. If you are an HGSI user, you can join my Insider Club. If you want to try it out, it's $25 a month, or you can pay $200 for the year. So you get a 33.33% discount if you join for a year. Now, I'm in the middle of a webinar series. This is a series that I do once a year, and it is for Insider Club members only. And most people take it year after year because the way the price structure is set up, for the first year I charge $4.95, and then after that I just charge $100 a year if you continue your membership in the Insider Club. Most people take it who have taken it before because they find value in it, and it's a good opportunity for me to discover what people really want. And there is interaction between me and the participants, and I continue to add to this wonderful program we call HGSI Investor software. It is the most flexible and powerful software out there. Nothing's hidden. Everything I do is visible to the user. All of my filters and everything. And I'm constantly updating this program. In fact, I'm working on some things right now that were requested at last Thursday's webinar, and I'll show those to you. They won't be available until this coming Tuesday for the Insider Club, and that's another thing. I believe that even if you're not taking the webinar series, you should have access to the latest files, and I just post them, and I send out an add-on link for users to update their add-on. And I want to emphasize this because I think a lot of Insider Club members don't know this, that you every day by 7 a.m. or every trading day would be Tuesday through Saturday, by around 7 a.m. I update the add-on file, and the link is provided in my Saturday emails, and just go in and update the add-on and you will have the latest files, the non-index files, and anything else that I have released to the group. Or I should say to the Insider Club, whether you're taking the webinar series or not. Everybody needs to be on the same page, and that's why I have decided to do it that way. I'm going to emphasize once more that nothing is hidden in the work that I do. You don't have to pay extra. If you're an Insider Club member, you get everything that I have, except for the new approaches and filters that I'm working on. And I release those as soon as I'm comfortable with them. And if I discover something that I don't like, or if I want to make a change, I just go ahead and do it. And I update the add-on file. And the next time you update your add-on, you will have all of my fixes automatically. I have been using HGSI for around 20 years. I was Ian Woodward's partner when we put on seminars at in Palos Verdes, California. Unfortunately, Ian passed away 3.5 years ago. So I have carried this on via the internet, which is a wonderful way to do it, and it's instantaneous. I can make fixes whenever I want to and pass them out to you. So this is a real advantage over what we did at Palos Verdes, because we held these seminars twice a year, and the files would only really get updated twice a year. Now they get updated daily. And I'm taking a totally different approach than in the past. Matt put in VPA flags. I think it's been a couple of years now, and that has totally changed the way I look at stocks and at the market. And I've added some other things like the Williams charts based upon Tom Williams type of charting, and But I'll get into all that. And if you decide you are an Insider Club member, and if you decide you want to join the webinar series, we're only 4 sessions in, and every session has been recorded. And the focus will be much sharper going forward, going through the whole process. Anyway, that's enough talking. It's 5 minutes. Let me go ahead and take a look at the market, and I'll show you some changes I've made. So I'm going to choose the group. This is part of what I do. I provide a market analysis user group, and if you look down this, you'll see all of the folders that are available. Now this adds to your update time, no question about it. Most of us have fairly fast computers now, and it's not a major issue. I'm going to go into my folder number 4, broad market indices. These are indexes that are created by HGSI during every update, and you can update intraday if you want to. I'm going to go to folder number 3. This is top-down process views for HGSI index analysis. I'm going to go to demand supply, which is view number 3, and there is a combo rank attached to each view and also a filter. These are the 21 groups that are contained in my broad market indices. And the sort is on the raw combo, advancing issues versus declining issues. So if you look down the list, you can see where the real weakness was. Everything was at least 2 to 1 down except the utilities. If it's under 0.5, it's 2 to 1 down. And you get down here and you can see the real weakness was in the Nasdaq 100 index, which is no surprise because that's where all the money's been flowing to the upside. So profit taking is setting in, and the semiconductor index really got creamed yesterday. 30 decliners, no advancers. Let's take a look at the Nasdaq 100. Now, if I were to change to the index group, it shows you the stocks that are in here and the industry, how the industry has did yesterday, how it did over 5 days, and then there's other information here about trends and the last VPA signal condition. I'm going to go back to the actual index itself, and I'm going to bring it up, and then I'm going to click up here on the quick pick. Going to go to the HGSI index charts, and I'm just going to go down to one of my favorite charts, which I put together probably, I'd say 15 years ago now. And I should keep a journal of this when I add these things, but I haven't, unfortunately. Anyway, what do we see on the Nasdaq 100? I'm going to point with an arrow, and you can see that it was at least a 5 to 1 down day because this is colored dark red, and the advancing or the declining volume led the advancing volume by at least 5 to 1 because this is red. The Force Index 13 turned negative, the Force Index 2 turned negative, and the volume point of control turned negative, and consequently I call this potential buy or sell because it's not so black and white. It's always a potential trade, and it turned red and has a negative pocket pivot because all of these bars or indicators above it turned red. So the Nasdaq 100 is suffered yesterday. You can see the advanced decline, 1.5 in advancing issues were 14 and the decliners were 91. This is where all the fat profits have been built up in the Nasdaq 100, and it's only logical that traders would want to protect their gains, so they're bailing out. Okay, I'll get out of here. I'm going to change to the index group, and then up here in my number 3 folder, I have gone down to the Nasdaq 100 level, and I put this in last week. If you're running Thinkorswim in the background, I added the 7A key, which is stocks and groups up intraday. I'm doing this on a weekend, but Thinkorswim provides the intraday quotes on the weekend. So you can see these are the 14 securities that were up yesterday, and these are the 88 that were down. And the combo sorts the weakest ones to the top, and you can see that advanced micro devices was the leading stock to the downside. I'm going to go back up one, and these are the ones that managed to fight the downward movement. Surprisingly, Tesla is still holding up very well, but you can just flip through these charts and see. Here's an effort to rise on Gilead. I'm going to leave this chart up just to take a quick look at Gilead. Normally, this is only for the HGSI indexes because it takes a while to calculate. And you can see here's the effort to rise. This is not a good chart for analysis, and I generally wouldn't use it. But I'm going to go back, and I'm going to click on the number 3 again. I want to take a look at a few more indexes. Now, not all of the indexes were hit that hard. Let's look at the S&P 500. And here's the S&P 500. You can see that these 3 indicators turned down, but there's no signal here because it was not a 5-to-1 down day for the S&P 500. Let's take a look at the all stocks institutional. You can see that these are stocks, by the way, that have a 50% institutional sponsorship. Not nearly as weak. It's a tech sector that got hit hard. Let's look at the Russell. Same thing up here. So not all hope is lost for the upside. It sure feels like it, but we'll see what happens on Monday. This one did not generate a 5-to-1 down day, and this is the S&P 1500. Let's go down here to, let's see if I can. These are the top stock holdings in the major indexes, and it did generate a light red sell signal because it was not a 5-to-1 down day, and you can tell that right over here. It would have to get down below 20. It's at 24. So anyway, there's some strength. Let's look at to the upside. Here is the utility index. Small cap institutional held up pretty well. So I'm not going to call a market correction. There's seems to be a correction in the high tech stocks, but when you come in here and only HGSI gives us this ability to break these indexes out and look for sell signals, which of course these are sell signals that I put together, and they're not totally accurate, no, but they do a good job. Now, that's all the market analysis I'm going to do for you because I think that's all that is necessary. There's going to be all kinds of doom and gloomers out there, and it's very possible that the coronavirus and the large tech stocks in the Nasdaq 100 can drag this market down. The smart money, the professional money, they've ridden this thing up, and maybe they feel it's time to start dumping everything to protect themselves. These markets do not go up indefinitely. We've all seen it. I've been doing this since 1983, and I've seen so many corrections and so many people lose their money. It's sad because most money is in mutual funds, and they've had a tremendous run. But you just have to protect yourself. Okay, let's move on to some other things. I'm going to get rid of this chart. I'm going to go down to, I'm using these Williams charts a lot. I'm going to go down to my number 9 chart because it gives me all the information that I really want. And I'm going to get out of my market analysis. You can analyze the major markets, the major market ETFs, the sectors, spider sectors, sector indices, and so on. And this is something that I added this week. I discussed it with the people that are taking the webinar, and I decided this is something I've been thinking about it. And here's the regular industries in HGSI under my market analysis user groups, and I decided to add these specialty indexes to the regular indexes. And the reason for doing that, and let me click through to the warehouse, and I'll just stay on number 3, make sure the filter's applied. There's 187 groups in here now rather than the 176. And the purpose of adding specialty indexes is that we can see how these indexes are performing compared to the regular indexes. Now here's an e-cigarettes index with only 2 stocks in it. I put it in there. I don't know why. It's really, well, there's been a lot of talk about e-cigarettes, so that's why it's in there as a specialty. I'm going to click up here, hit my space bar, and type in, if I can type this early in the morning, and I can't, canaries. So I'm going to find the first. Canaries are clear down here at 140. You can see there was 1 advancer and 9 decliners. I'll bring that chart up. Hit hard with an effort to fall. I can right mouse click, change to the index group, and then I can, because I have Thinkorswim running in the background, I'm going to look at the ones that were down today and the ones that were up today. Tesla's the only one that's up in my canary group. I did add Adobe to this last week. This is one of the things I do when I feel that it provides insight, but every one of these stocks were down. Let's bring up Amazon. Negative pocket pivot, effort to fall. These green areas in here, I'm adding what are called visual filter back tests, and this turns green, and that's something that I'm really getting into in the webinar series because a lot of people are curious about it. And it's something I'll explain as I get a little further into the video. Anyway, these canaries had a fairly bad day. NVIDIA had got hit for 4.74%. But look at this. I mean, it's had a major run up, and it's no surprise that it's selling off. 3 has not crossed 6. 3-day exponential moving average is really a substitute for price. We'll see how it holds up going forward. Okay, let me get on or back to this. Anyway, there are some specialty groups in here. How do you find them quickly? Click on industry, go over here to the left, go to the top, and they are not in an industry. So these are the specialty indexes which are not in the regular industry. It's a quick way to find it. Let's see how the 5G related stocks did yesterday. I'm going to change to the index group. I'm going to go back down here to the ones that were up for the day. You can see this is green over here, and the ones that are down for the day. So let's take a look at some of these that were up for the day. How about F5 networks? You can see that it was up for the day in a very weak market. Look at this low pivot with a confirmation test and confirmed, and it started moving up. With VPA added to HGSI, I don't think there's anything that can touch this program. So yeah, there's a lot to learn, but you can settle on a few things and just go with it. So effort to rise, you can see it gapped down, traded down here. Very strong signal because look where the closing range is, near the top of the list. Now if I go up here to the number 3 chart, this is the intraday from yesterday. So where's the range? 97.45. Last volume, 601,000 shares. Volume change was actually down, and you can see that these volume numbers are down. So what does this mean? It means that if it closed near the high of the day, there's very little supply for this stock. Everything is based upon supply and demand. You can see the volume numbers are running low, and it was closing near its high on all of these days. A gap down here, red bar, but it closed near the high. It just means there's not a lot of supply in this stock. And this is what you learn by looking at charts. You need to learn to look at charts. Don't look at too many indicators, because they're all lagging. Okay, so let me go back up to number 3 here. That's the difference. I just added these specialty groups, and there will be more specialty groups probably as I go along. I don't want to put too many in here, but I think it's important to compare. You can see that the 5G, by sorting on the raw combo, was clear down here at number 5 because of the advancing issues versus the declining issues. But just by going down to that next level, you can see which ones are strong and which ones are weak, and you want to look for the strong ones, especially on a bad market day like we had yesterday. Okay, I'm going to go back into the designer, and I believe that's the only change I made in the designer this week. I'm always trying to come up with ideas to make HGSI more efficient and to give us greater insight into the market, and that's what this group is all about. Now, I don't want this video to get excessively long. I hate listening to long videos. I don't have time, so I just don't try to make long videos. I'm already 22 minutes in, but I'm going to try to wrap this up with around a half an hour. Before I get into some of the new things I'm working on, let me show you a couple of spreadsheets. These are trades that I started putting on. When was my first trade? The entry date is right over here. I started on the 4th as I was starting to prepare for the workshop. So that was one of my first trades. Here's one on the 3rd. ASPU, that was my very first trade on February 3rd. I didn't want that. I wanted the dates. So the 3rd was a Monday. We're on the 22nd. So this is how I've done using these techniques. I have currently have 8 trades on. I got stopped out of one yesterday, and I'll probably re-enter it if it sets up again. And that trade was HZO. But over this time period in this market, this includes yesterday, I've traded 19 times. I have a 58% winning rate, which is good. I'd like to get this up to 70. Depends on the market, though. Everything is dependent upon the market. And have a net profit and loss of $18.92. Since there's no commissions at TD Ameritrade, my gross and my net are the same. And you can see that the equity curve has been going up. Yesterday, in this really bad market environment, I only lost $94. I had 9 trades. I have 8 trades now. This TJS spreadsheet is, if you're serious about trading and you don't want to cheat, you want to know exactly where you stand, look it up. And when you order, if you do order it, because we have an agreement with Greg, you can get 15% off. And I believe the code is HGSI minus 15. But I can look that up if you want to email me. I will get you the information. You can see that these are all small trades, and the reason I'm only risking $250 per trade. Everything is set up in my risk spreadsheet. If you're an HGSI subscriber or an Insider Club subscriber, even if you're just an HGSI subscriber, I will make my spreadsheets available to you. These are something I put together probably 3 years ago. I don't think I have it up. Let me open. It's a spreadsheet which helps set up trades and controls your risk. This is all about risk-based trading. Here's one that I put in yesterday, TSEM. I didn't buy this stock, but I wanted to check out my risk reward, and my risk was only going to be 3.44%. And this is to the long side, buy plus highs 23.84. Sorry that other spreadsheet just keeps popping up automatically. Let me see if I can minimize that. And you just put the high, the low minus 4 is a stop, and it will determine how many shares you have to buy. And here's your risk dollar amount. If you get up to 1R on the positive side, this is the number you have to attain. And if you get lucky and your stock picks are good, if you would happen to get a 5R, 5 rewards for every risk, you'd be up to 1,230. But getting back to that other spreadsheet, let me bring that back up. And I'm getting close to my 30 minutes, so I better hurry up. I'm going to run it over a little bit. But you can see, here's a gross profit and loss. I have not taken any big trades because I wanted to prove to people that you don't have to trade big to make money. And if you control your risk, you're not going to get hurt. So that's all I'm going to say about that. If you subscribe to the software, you write me an email and I'll send you the link to the spreadsheets. I have a 0.5% risk, a 1% risk, and a 2% risk, and you can change the capital requirements. On this one, I'm $50,000. If you want to bump that up to 100, 200, whatever, what this spreadsheet does, and let me finish this off, it tells you, it position sizes, and it tells you how much risk you can take. So on this TSEM, I could have bought 300 shares risking 3.44%. And this is the position sizing right here. It tells you how many shares you can buy to attain or control your risk to $250. Yeah, you can have gap downs. You can lose more than that. But it's a good risk-reward indicator. Now, let me show you something very quickly here. Let's bring up TSEM. I don't even know what happened to it yesterday. And I was looking at it because it was it had sold out. Let's go to the number 9 chart. It had a low pivot and stopping volume over here. It had a test, but it didn't materialize. I didn't even put the order in yesterday. But had it taken the high out on this, I would have considered trading it. But let's just use this as an example. These blue bars represent low pivot points where you're looking for a safe entry. Now here's a low pivot. Here's a low pivot that wasn't activated because the prior day's high wasn't taken out. This was activated and it made a nice run. And then it fell off after some VPA flags. And I was looking, I didn't have a low pivot the day before, but there was a low pivot back here. And if it took out this high right here, I was interested in the trade. This is a low risk trade, even though it is going down. Why is it a low risk trade? Because on the weekly chart, this stock had been moving up nicely. It had a couple of weeks in a row for a price reversal. If it would have taken out that high, that would have been a confirmation, but of course the week was real bad, so that negated that. What we're looking for low risk entries. And if I go up to just a plain chart here, well, this is really not a good example. Well, I'll use it anyway. You click on this tool, you click on the R key over here, and let's forget about this bar here yesterday. If I were considering taking this trade, I would start down here at the low, and if I took it up to the high of the prior day, it tells me that my risk would be 4.46%. If I want to adjust that, I click on the arrow, bring this down. If I just want to take out let me start over on this. Sorry. Okay, we're going to forget about that bar because that hadn't happened yet when I was looking at this. I'll just move this over here. You can do that by scrolling down here. Now I'm going to click on the R key, go back to this. So this would be the low point right here. And if it took out the high of this bar and surpassed that one, I'd be risking 4.45% on getting into this trade. Now you're gonna have some resistance over here, but if I were to have taken this trade in the spreadsheet, do I want to risk 4.45%? That's not bad. I'd like a lower risk down in the 3%, but this tool is great because it gives you a feel for what or it tells you what your risk is going to be. And then if you want to adjust this to another place, let's say that I want to risk 3.37%, so I'd have to buy it immediately. This really is not a good chart example, but that's just another tool that we have in HGSI. Matt put that in for me several months ago. Now I'm going to wind this movie down, but before I do that, I want to show you some things I'm working on. This will be released next week, hopefully for the webinar on Tuesday, and then it'll be available to everybody else in the add-on file after that. I'm going to go to my quick pick, and this is a suggestion from the webinar series where I have interaction with people. I ask them if they would like to see these charts. Let's go down here to the I'm going to go down to the pre-continuation counter trends, and what this is a mouthful here. It's a bullish VPA flag today, fan up, counter trend. The 3 is below the 6. You can see that there's 61 securities that come up. Now this is one that I believe Jeffrey highlighted a few weeks ago. It was on a good run, and then it collapsed. And these green bars in chart number 1 indicate that it meets the conditions, but I'm not interested in that. These are charts that I'm putting together. What the people in the webinar, the customers, friends, customers, want is a chart which shows where these conditions are met on any stock, not just the ones that are being fanned out. So if I'm looking for a stock that meets these conditions, and let me bring the chart or the filter up. The conditions that have to be met are any of these VPA flags have to appear, or one of them does. Days Since the last VPA signal equals today, last close dollar 100,000 shares. EMA fan uptrend equals yes. And the days down since the 3 crossed the 6 is greater than 0. And I'm letting all stocks through rather than just stocks and groups. To change this to stocks and groups only, all you have to do is change that to a greater than. I spent a lot of time building filters, and there's a lot of work in here. And you're getting a great bargain is what you're getting if you are an Insider Club member. So anyway, let's go back here to PennyMac. You can see the colossal weekly failure on that after the breakout. Big move up, and then it collapsed, and now it's setting up again. And that is due to the VPA flag being here, and the 6 is below the 3. Let me just make this full screen and zoom in on this so you can really see what's going on. The green line is the 3, the red is the 6. You can see this is a very bullish flag on this on yesterday, and the conditions are met, so there is a green bar, a VFB bar that appears down here. Now I can, by creating this chart and attaching the VPA flags to this, I can put any stock in here, and let's just go to ADBE, Adobe's. I'm just pulling this out, and you can see that clear back here, the conditions were met because, let me bring this up, the 3 was below the 6. How do I know that? I look at this histogram. The 6 was above the 18, and this generated the VPA flag, and you can see what happened. It moved up, came back down, tested this area. This is a low pivot. These bars represent low pivots where you had an opportunity to get into this stock. Now this is just one of the 4 or 5 stocks, charts I should say, that I'm going to give to the Insider Club. I have to tweak them. I have to double check everything, make sure they work. Now this is a continuation VFB. All of these green bars represent where the conditions were met for continuation. And the continuation is what I discovered after looking at hundreds, if not thousands of charts, is that the continuation generally has a pocket pivot. The blue bar is on here. So if there is a blue bar and I'm going to put a crosshair on here. The other conditions are met where the 3 is above the 6 is above the 18, the VPOC is positive. I consider this a continuation flag. So even though Adobe was down this day, it closed near the high of the range on heavier volume, which means demand was outstripping supply. You can see this didn't work because it was a negative pocket pivot, but back here was an entry point, and the 3 never did go below the 6 until yesterday. Now we're getting negative pocket pivots on this chart. So I've got 4 different charts I'm working on. They'll be released this week if I'm happy with them, and I'm sure I will because I'll work on them over the weekend. Anyway, I'm going to end this. I'm up to 39 minutes, and that's a long time to listen to me talk. So thanks for listening. If you want to subscribe to HGSI, go to highgrowthstock.com and subscribe, and then you can subscribe to the Insider Club. Try it. Well, if you subscribe to HGSI, you're going to get, I believe, 6 weeks of free membership to the Insider Club, and then you have to make a decision. And then also, if you join, you can join the webinar series if you want to. It's to join that, you would just go to www.hgsinvestor.com. Thanks for listening. Hope you found this interesting. Have a good weekend.